connect with Anshul Saigal as well, who's joining in on the show. And Anshul, just talking about the markets at large, because it has been a fairly encouraging performance to say the least. The fact that the broader markets have been participating, banks have been on the front foot. Where is it that you're seeing that sectoral leadership as we proceed through the rest of the month?
Morning, Avan. Thanks for having me. Um, it's been a very broad-based rally, and so one will have to be very stock specific henceforth. This is not going to be a sectoral push that we'll see many some sectors doing well overall. But going forward, we'll see individual stocks where we'll see opportunity, and that's where investments will be where the risk reward will be favorable. That's where we'll have to invest. One will have to be cautious at this time. At about 21 times price to earnings, Nifty is really not leaving any room for error. And even in the broad markets, where the historical trends in the discount in Nifty small cap, Nifty mid cap versus Nifty large caps, that discount is at a historical low. I don't see any room for error at this time. So one will have to be very stock specific rather than looking for sectors which will be leaders in this rally. As it is, there is, amongst various sectors where there was opportunity in the recent times, we've seen much of that opportunity getting realized. And henceforth, it'll be a very stock-specific opportunity that one will have to look for.
Get a bit stock specific then. Morgan Stanley's latest note on the entire FMCG space, they've spoken about some tactical ideas as well, but they're by and large saying that, we are likely to see some sort of a moderation coming into the entire space. Where is it that you're seeking outperformers within FMCG, where we saw that rally play out about a month ago or so, and how do you see it pan out?
Is that for me?
Yeah, Anshul, FMCG.
Okay, so FMCG, overall, that space is, of course, has been pulled back a little bit because the rural economy has been weak. Rural economy, we anticipate, is likely to pick up. If you look at the results of the last quarter, you will notice, if you were listening to results calls, you will notice that most companies, FMCG companies, were indicating that the rural economy is going to turn around. They're seeing initial signs of that playing out. And given that companies which are more leaning towards rural and where there has been inordinate sort of hit because of that in the recent times, it is those companies where we will see opportunity going forward. Of course, this is a defensive sector, so you would need to be in this space only if you're trying to prevent downsides. However, there will be stock-specific opportunities in this space where the leaning towards rural is significantly higher than the other companies. So one will have to be again very specific to opportunity here and look for those names where that segment of the market has been weak.
Okay. Fair enough. That's the view coming in on the entire FMCG space. In fact, we had also gotten a sense from other market experts as to what the outlook is when it comes to the rural economy, what it could potentially mean with especially the budget lined up, and what that could mean for some of these stocks. So we will get you some snippets of those conversations that we had. But in the meantime, then, Anshul, let's also understand what exactly the outlook is when it comes to these new IPOs, for instance, like an MCure, the kind of IPOs, the kind of subscription figures that we have witnessed, some of the other recent listings. Has anything caught your eye?
Typically, Avan, our view is that it is always better to let many of these IPOs get listed, see how the price action has been, see how their performance has been on the ground, and then take a call on whether you want to invest into these names or not. Many times, in fact, I would say most times, there is no incentive for either the merchant bank or the promoters of the company to leave too much money on the table. And hence, and also, there is so much of a mad rush to go in and buy into these names that even even if there is some money on the table, you don't get much subscription. So I I'm not too much of a fan of IPOs. I generally tend to stay away at the time of the IPO, but then studying the company over a period of time, it gives you a sense whether this is an opportunity that one can take or not. And as a result, and also seeing what has happened in terms of subscriptions of late, I have not been following this space too closely. I think that going forward, also, that is the strategy that we recommend to our listeners and your listeners, that be cautious in many of these names. Also, when the markets are hot, you will see a lot of substandard companies coming in and looking to raise money because the market is giving them that opportunity. As a result, you will find few opportunities which are lucrative in terms of quality as also in valuations. As a result, just be a little cautious in this space and look for only specific opportunities rather than the space as a whole.
Okay, let's.
Would you play any late stage real estate ancillary now? For several years, they haven't really worked, but look at how Kajaria has come above the 1500 mark. Something else of similar nature beyond the straightaway direct beneficiary real estate companies?
Hi, Ajay. Yes, that's an interesting question. In fact, in the real estate ancillary space, there are companies which are quite attractive. If you look at the cables and wire space in particular, that is a space where you are seeing significant tailwinds. One is, of course, because of real estate sector doing very well, and second, it is also because the infrastructure space is doing very well. So, as regards the cables segment of the cables and wires space, it is because of infrastructure. Wires is because of real estate doing well. Now, within this, there are segments which are even more attractive, which are, more related to the safety aspect of, segments as in the sheathing of cables and wires. Now, that space is exploding as a result of the underlying demand in cables and wires. And if you can find opportunities in that space, it offers significant upsides even from here. Of course, near-term volatility cannot be ruled out because markets are where they are. But in the long term, say 3, 5 years, there is significant opportunity in that space. In tiles, in plywood, in MDF, you have some high quality companies, and yet you have a large part of the market which is unorganized. We anticipate that unorganized market is going to continue to shrink, and it will be the organized quality players who will keep gaining market share. And in some of these companies, what is also quite interesting is that the redeployment of capital that they generate is at such high return parameters that you don't find those dynamics in many companies outside of this space. So we anticipate that space to do exceptionally well going forward. And then, of course, the financiers. We think that the financiers are trading, some of them are trading at highly attractive valuations at this time. And with the outlook for real estate in general, some of these financiers will generate substantial returns going forward. One, of course, because they are compounding capital at very high rates. Second, because valuations are so reasonable at this time for many of these names that you will see multiples expanding from here. Bear in mind that these financiers are holding significant capital at this time. Some of them are, they have capital adequacy ratios of as high as 42, 43%, which leaves substantial room for them to grow without raising capital from the markets. Taking all of this together, we think that if the engine is doing well, which is real estate, then the bogies will continue to perform quite well going forward. And this is not a 1 year, 1 quarter story. This is a 3, 5, 10 year story, as the clip that you had shown and Mr. Hiranandani was mentioning earlier. And so you've got to be just patient. The sector has cleaned up so much. Just sit, take the ride, and don't be too impatient to get off.
Focus on Bandhan Bank. Remember, we highlighted earlier as well that they've come out with their Q1 update and the loan growth has seen a pickup. The CASA has declined sharply. Sequential loan growth, in fact, has come in at about 0.7% on a sequential basis in Q1, which is better than the growth reported in the previous 3 years. Anshul, I guess the quandary is not whether you've got to stay in banks. I think that's very well established. But whether or not to pick up the private banking names, the large cap ones, or whether to play the valuation catch-up stories like a Bandhan.
Morning, Aisha. You're right. That is the sort of conundrum, and the answer to that is not an all-encompassing answer. I can give you the answer that suits my risk profile, the risk profile of some of the people that I kind of interact with. But that is an answer that each investor will have to look within and basically figure out. What I mean by that is that we have seen in the recent times that some of the PSU banks have done very well. But despite the price action, these are stocks which are trading at under 10 times price to earnings, maybe at 1 time price to book. And so, given the situation in the economy where corporate lending is going to pick up and with gusto over the coming few years, this space, the PSU banking space, is likely to see tailwinds in advances. And hence, the valuations that they trade at this time, despite the price action, those valuations look attractive. However, seeing their performance in the last 10 years, this space is likely to be volatile. So if you can bear the volatility, then at these valuations over the long term, there is very little to lose and much to make. Now, on the other hand, if you're a safe investor and you don't like volatility, then clearly the private banking, high quality private banking space is well suited for you for the reason that some of those private sector banks have also not performed in recent times. Price action has been adverse while they trade at expensive valuations, but those expensive valuations have pulled off quite a bit. Some of the banks which were trading at 4.5 times price to book now trade at 2.5 times price to book. And so, again, there you will see limited volatility, but upsides will also not be as much as you will see in some of the PSU banks. So, depending on what your risk profile is, what makes you sleep well, you should take a call and look for that answer within yourself, whether you want to be in one space or the other.
For that, Anshul, do you think that this CNG bike, actually yesterday in our interaction with Rakesh Sharma of Bajaj, we figured that actually it's going to be a hybrid bike. It will be petrol and CNG. And he was making a point that this could be a very pivotal point in overall two-wheeler space. Just like it was a few years back when Maruti actually launched its first hybrid vehicle. And we did see, especially in NCR, you may recollect that NCR saw the biggest shift, especially in the taxi usage and others commercial side of passenger vehicles towards CNG. Could this be an event of that sort?
It's possible, Ajay, at least in the cities, because that's where CNG penetration has picked up. However, from the perspective of the stock, what one needs to figure out is that whether this will be as lucrative as a proposition as the existing bikes. Whether this business will make similar sort of return on capital as the existing bikes. Having seen the sort of track record of many of these companies, my guess is that they would have not entered into this space without figuring out whether the return on capital will be as good as the existing business. So if that matches, I do estimate that there will be enough demand for this product to make it a game changer for many of these companies. The other question to ask is how much of this is already priced in, as we have already seen that some of these companies have given stupendous returns in recent times and market caps have really expanded quite significantly. Some of that expansion is also on the back of expectation of these bikes coming into the fore. Now, having seen the bikes getting launched, whether there will be a further uptick in stock prices, that one will need to figure out. But clearly, this is a business which could be attractive and could generate significant demand for these companies going forward.
Looked at some of these Alcobev stocks recently on valuations. Anything stands out in including the new offerings on valuation terms? Anything in your risk reward radar?
Ajay, there are I mean, I don't want to talk about individual names, but there are very interesting names in that space. Some of them are, kind of hidden because people look at companies with brands and where 100% of the business is in the Alcobev space. There are certain companies where the business is split between ethanol and Alcobev, where valuations have actually been quite attractive because the ethanol space has gone through its own, turmoil, its own volatility in recent times. And that, such companies will offer opportunity going forward. It is there that one finds risk reward being favorable. Some of these companies are also trying to brand their product. They have been mass or sort of producers of alcohol, which is white labeled and which is given to others who pack it in labeled bottles and then sell. These companies have been trying to brand their own product and sell in their own bottles in their own brand, and hence there the margins as also the return on capital is expected to go up. Now, that one will require a little bit of, detailed understanding of such companies to find out opportunities. I feel that some of the companies in this space will offer significant opportunity going forward. But for that, one will have to look at these companies in much more detail and with greater precision to find that opportunity.
This is very interesting. I'll definitely like to dig deeper. I didn't know that we have listed companies which are doing contract manufacturing of alcohol, and now they are moving from contract manufacturing or kind of a job work to own branded. There clearly would be a valuation change and of course the margin change as well. Anything else, Anshul? What are you studying right now? What was your last addition in your portfolio? Not in terms of name but category, or have you been trimming around as well?
Doing a bit of both. There are opportunities where one finds that in the next 3-5 years, you will see significant uptick in valuation. There's also in numbers. If you look at the capital goods space and speak to some of the companies in that space, Ajay, you will notice that these companies are indicating anywhere from 25 to 35% compounded growth in revenues in this period. And these companies have not yet been discovered. They are trading at valuations far lower than the frontline players in this space. So if there is volatility, even from these low valuation levels, these companies can see downsides because the general market is volatile. So one will have to bear that volatility. But given that you have the luxury of time, that if you can hold them for 3 to 5 years, these companies will deliver substantial returns from here. And the risk reward is quite favorable at this time in this space. Of course, I'm talking about certain pockets within the space of manufacturing and capital goods. If you go into housing finance, there are very attractive special situations in that space. And
It's such a
should
pleasure
I
having
continue?
you on the. Yeah, please go ahead.
Yeah, in the housing finance space, there are very attractive special situations. There are certain names where there have been rights issues done, and the rights issues have been through partly paid shares, and those partly paid shares trade at a very attractive price versus book. If the stocks reach book levels, then these partly paid shares can deliver very attractive returns going forward. That is another space that one is looking at. I also alluded to the cables and wires space, where the sheathing of cables and wires is a very important activity for safety and precaution. And in that space, there is opportunity at this time, attractive names trading at attractive valuations. If one digs deeper into that space, there will be opportunity. So opportunity abound. It's just that one will have to be very stock specific. And on the other hand, one will also have to keep booking profits in names where valuations have gone out of whack. So a bit of both.
Absolutely, Anshul. So great to have you on the show today. Thanks for taking the time out.
It is my pleasure. Thank you, Anshul.
Okay, the pre-open rates are...
If you like this video, then like, share and subscribe to ET Now.